Hello everyone, welcome back to our channel.
Hope you have a wonderful day. If you are new to this content, to our content, we usually talk about a lot of things when it comes to
Money, our personal finance, family budgeting, saving, side hustles, investing, and anything in between to achieve FIRE.
So if you like this type of content, don't forget to subscribe, comment. That would be muchly appreciated. This will be the last series when it comes to tips that will change the way you think about money. So if you guys are new, there's bound to be about 4 or 5 videos or so far that we made about this.
Yep.
This was the last bit.
Yeah, last bit already. We talk a lot.
So, going straight to it?
Yeah, okay. First one, automate the bill payment and saving.
So at one stage, I received a lot of bills.
Yeah.
And
Well, what do you mean? Now you still receive a lot
I
of
still
bills.
do.
Yeah. But they're more organized. They're not like a bomb to you now. They used to be a bomb.
It used to be very stressful. It used to be at a stage like, I don't know which one I'm supposed to be paying first. I'm scared to be late.
Yeah.
So instead of that, I've started to create a system somehow to make it automatic. For example, our internet bill that get paid direct debited.
Yes.
Phone bill, our mobile phone bill. Yep. Those are the
Insurance.
Insurance.
Kids activity, they all charge direct debit anyway. And then I put saving from one of my, I am earning salary now. So from that account, automatically, I put I think $200, I mentioned last video, $200 into our saving account. So automatically, don't have to touch it.
And then our superannuation contribution.
Oh yes, that's well, we contribute a lot anyway. You contribute into yours, you contribute into mine, and I contribute into mine. So my money is my money, and his money is my money.
And we try to automate a lot of things so that way every time you get paid, the first thing is pay yourself first.
Yes,
So,
pay your future self.
Yeah.
That's how I see it, right?
So every time, every week we automate all of those. So that way we don't have to think about it. And then, the next following day, that's when you start to distribute where all our income is going to be.
Yeah.
Because sometimes, like for example, investing, it can be fluctuate depending on what's happening throughout the month. But if you have all of the automated stuff going in, and then it sort of help a lot.
Yeah, you can only spend whatever you have left, and don't use your card. Yeah, try not to.
So the next one will be the type have some sort of emergency fund.
Yeah.
So for us, there's a few different ways of emergency fund, we call it. So the first one will be home expenses emergency fund.
Yeah.
That,
well, we don't split it into like only this category. Is only you save your emergency fund, you touch it only if these happen.
So for example, home expenses is not just for an upgrade, more like in case if the roof leak.
Yeah, emergency.
In case if there's a pipe burst.
Fire.
In case if there's fire, which what happened to our investment property.
Yeah.
So that's number one. Like this is not in any order as we see it, but that's how we look at it as an emergency. The next one will be if you lose your job.
Oh yeah, of course. Because you don't have any more income, then you may have to go into your emergency saving. But that's why we always say, well, if you are a full-time worker, maybe try to save 3 to 6 months of your salary as emergency saving. Then you will have a buffer of at least 3 months to live in with your emergency saving if you have to touch it in case you lose your job. And in that 3 months, you look for a job, right?
Hopefully. Yeah. The next one will be car breakdown. I've seen this so often in the highway. Like
why is the car breakdown?
I'm not quite sure. Okay, so the one, you could be old, it's not being serviced properly.
I'll say because people sometimes they just like skip the service.
Maybe. So they don't take care of the car. So far, like this month alone, I've seen 2 to 3 car breakdown in a highway.
Right.
So one of them has smoke. And I'm hoping that at least you get some sort of towing service or, it's going to cost you whatever it is to repair it. Maybe the tire blew up or so, and you hit a nail, you gotta change the tire.
Yeah.
That's an emergency as well, because if you can't do that, you can't drive it as well.
You can't go to work, you can't drop off the kids, you can't go anywhere. You have to go for a car rental as well if you don't have insurance.
That's it. So for me, like, having a car, I guess a buffer of an expenses in there. And sometimes when I have to just go on a scheduled maintenance, we expected only a few $100s or so, it becomes to $2,000.
Oh, well, that'll count.
So
yeah.
You know, having a buffer in that helps a lot. It gives you some sort of breathing space.
Yeah.
So the next one
is medical emergency. Well, one stage, few months, was it this year?
It was this year.
Yeah,
I had to go to an operation, and that cost a lot of money.
A few $1,000s, but we didn't really touch our emergency fund. But what if we got because we got quite a lot of saving so far.
Yeah.
But what if you don't have saving and you don't have emergency fund in there for your emergency medical bill? Well, everything emergency is dramatic.
And then there's also you with your dental.
Yeah.
You know,
At one stage, got really painful lump on my gum. So I did a root canal and then got a crown there. It's like $5,000.
There you go. So things could happen. And now because we have children as well, we have to have an extra cover just in case if something happened to them.
Yes.
So the next one is my family medical travel emergency. So that to me happened actually recently. Yeah, our parents is overseas. We're here in Australia by ourselves. My father had a stroke, so he needed I guess the financial side of it, and we haven't been able to do the travel bit because of COVID.
Yeah.
But you know, like
you have to send some funds there to help him.
So and that might be one way for you to be able to help other people as well.
Yes.
So
it's a stressful moment if you don't. Yesterday I just talked to my dad, and then you know, sometimes I talk about money with my dad as well, and then we just saying, when you have money, you have more option.
Yeah.
Is the option is money cannot buy you happiness, but they give you like options. Yes.
I love the way your father talk though. It's always deep and meaningful.
I know.
And he doesn't say much, but he say like
golden words.
Exactly. It's like that.
Yeah, okay, next.
The next one, you can have too much saving apparently.
Yes, definitely. I think because if we're not going to save the car, I think we'll put a lot more in our investment. Yes.
Yeah.
Because for us as a family, we try to save 6 to 12 months after COVID.
Yep.
Before we're like 6 months is okay, leave it in the bank. Anything on top, put it in investment. Because if you have too much and the money interest rate is not that good anyway, for us, even we have the high interest online account, saving account is making 3% a year. But if you put your extra money on top of the emergency fund, put it in investment, based on historical data, it returns 7 to 8% in Australian or international stock markets. That's why we put majority of our extra income on funds into ETFs.
So, and that's what I guess not only with the property side, because with the property is bigger value, but in the ETF is probably easier option to get into investing.
And small amount each time.
And if you can get a higher return, anything above that, it's sort of like I guess.
It's bonus on top. And also inflation these days, I don't know what's the inflation rate currently. Apparently it's just way too high. So if you leave your money in the bank or leave it under the pillow or under your mattress, they're not going anywhere.
And it's actually the buying power of that money is actually deteriorating. So $1 today will not be able to
50 cents in the future.
The next one will be attention to
pay attention
to your fees. Sorry.
Yes.
So fees can eat up all of your savings. Well, it can get to. So for example, for the first time this year, I actually have to pay a bank fee.
What are those?
So that was quite a shock for me. Yes, it is a small amount of money, but it's like, or if you have multiple account and multiple different bank fees, it can all add up.
Yeah.
Or if not, late charges fee, or credit card fee, or yearly membership fees.
Oh,
like
yes.
all of these fees
All adds
it
up.
all adds up if you don't look into that. Pay attention
Well,
to
you
that.
have to track on it. I always subscribe to all these first 3 months or first month free trial Amazon Prime.
For example.
So I joined it because it's free shipping for 1 month. Why not? So my plan was, so I joined it for free. I got free shipping. Within that month, I'm going to cancel it. Wait till last day. Really, I don't have nothing to buy. Okay, and I forgot to cancel it. Next day, oh no, they charged me. I'm going to wait for another month and see. No, I got nothing. So 2 days before the second month finish, I cancel on it.
We're not a big shopper.
No. Yeah.
So that's why the reason why we decided to stop there.
If you shop a lot, I think it's okay. But for us, sometimes we're looking for things to shop, then it's not healthy.
Yeah.
Like, because it's free, I should get something. It's free. No, why don't you just don't have it?
Yeah.
If you really need it, pay for shipping. It's okay. You save a lot eventually.
And the last one, it will be rebalance your portfolio in a regular basis. So for us, I looked at our investment portfolio to see how many percentage on each product, let's say, and figuring out, okay, what's the next stage? What do we have to do?
But that is in the ETFs.
In the ETF,
right?
Yep.
But I'll say back in a longer term, we used to only invest it in properties. We heavily, pretty much 100%, we're in properties.
Yep.
But then realize, we're just putting way too much of money in there, and capital gain, yes, but only you can achieve it if you sell it. And now our goal is not selling it. We just want to keep getting the rent from this rental property.
It's the cash flow. So we're rebalancing it beforehand. It was like looking at a capital gain product and then realizing, okay, capital gain only can be realized. You can start using that capital gain if you sell it.
Yeah.
Whereas now we're going to change it into cash flow based investment.
So we firm a lot of debt, 1.2 million, I still remember, 1.2 million debt. And then we sold one of it and then paid off one of it, and then few of them in vendor finance.
Yep.
So now our debt was it 500, something like that?
Yeah.
400, under 500.
But now it's
$1,000.
changed, rebalancing it, we're changing it into, instead of negatively gearing where it costs less money, now it's actually giving us positive cash flow. And then we can use that positive cash flow to utilize it
in ETFs.
In ETF to generate another positive cash flow. Correct.
So we invest money go back to investing, and then when ETF, they have like dividend and everything coming, and then we reinvest again. So your money keep growing and the snowball effect.
That's the idea of us.
So that's our current plan, but don't know if our strategy will change.
Yep.
But you have to adjust accordingly based on your lifestyle, your stage of life as well.
So I think that's about it.
That's it.
All right, cool. So if you guys like this type of content, don't forget to subscribe, comment, guys, and
see you next time.
Bye.
Bye.